This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of sci-fi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and Leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
All right, hi everyone, Andy here. How are you doing? Hope you're having a good week. Hope you're enjoying the very famous volatility in the crypto markets. Amazing to see Bitcoin break 60,000 US over the weekend, and then of course, as you probably expect, had a little bit of a dump in the last 24 hours or so, but that's just what we expect. Volatility in both directions. I'm sure the upward momentum will restart again soon. Hey, I just want to say thanks to everyone for listening to the episode I did last week on the episode that was a bit different, when it was just me talking to myself for 30 minutes or so, and particularly reading highlights from that CT investor letter out of Norway. So I did ask for feedback for that episode, and I got some, which was great. So, shout outs to Cameron and Daryl and Lewin for getting in touch and letting me know that they did enjoy that episode and happy to have more. So I don't think I'm going to do one this week because I've got a really packed, solid schedule of interviews this week. Got Samson Mao from Blockstream, he's on the show this week, and Alex Mashinsky from Celsius is also returning to the show this week. So those two interviews are going to be big shows, obviously. But yeah, from next week, I probably will do a weekly show where it is just me doing some kind of a slightly deep dive into whatever the most interesting macro topic of that week is. So again, thanks to Cameron and Daryl and Lewin for getting in touch. And look, if anyone does want to get in touch, talk to me. Twitter DMs are open at Andy Pickering NZ on Twitter, or just drop me an email. I would love to hear from you. Andy@bravenewcoin.com. All right, actually have quite an interesting show for you today, wouldn't you know? So you may not have heard of Dr. Marc Fleury. Now, I hadn't really heard of him either, but man, I really did enjoy talking to Marc. He has some unique perspectives and a really interesting mind, as you'll discover. So do make sure you listen to the whole show, and we do the hot take round at the end, and get into some deep stuff there as well, which I really enjoyed. But yeah, let's get on with it, I reckon. My guest today is Marc Fleury. Marc is the founder and CEO of 2Prime, a digital assets investment firm. Hey, welcome to the show, Marc.
Hey, how you doing?
I am doing very well. Hey, look, to begin with, I think let's just, before we get into what 2Prime is, would be good to learn a little bit about yourself. Maybe just give us a little bit of your personal background and how did you first get involved with Bitcoin and the blockchain space?
Sure. I'm a Franco-Spaniard born in Paris and raised in France and Spain. Acquired a PhD in theoretical physics for work I did at MIT and the École Polytechnique in the 90s. Went to work for Sun Microsystems, now Oracle, when Java was just in its infancy, and became one of the first evangelists in Java. I left Sun to create one of the first open source Java projects called JBoss, which is now used all around the world as infrastructure. You may or may not have heard about it because it is infrastructure, but it powers Wall Street, it powers the Bank of China. And we pioneered models of open source and professional open source, or how to monetize open source. Eventually, I sold the business to Red Hat, now at IBM, in 2006, left the software field to retire and be with my kids and go back to research, actually. Discovered Bitcoin in 2011 through the paper of Satoshi, which I studied from a modern monetary theory standpoint, and that was my introduction to the open source money, as it was called then, and got in the field, so to speak, professionally, in 2017. Sort of deciding where I wanted to spend my time and my money, really. Not just as an investor, but also as a participant in the field. And eventually we settled on I invested in a bunch of companies, and one of the entrepreneurs is now with me in the fund called 2 Prime, and we're sort of a modern day crypto investment fund leveraging the latest in derivative technology in the crypto field, and that's what we do.
Very nice, Marc. And so it sounds like, you have a fairly deep background in computer science and open source, and I get the idea that you are very much interested in Bitcoin from that, I guess, open source perspective. Is that fair? Yeah,
few people realize that really what makes Bitcoin so powerful on many layers as a financial transaction layer is that there is no one behind it. What we call decentralized in the industry is really the result of the open source nature of the paper and the code that was written in the 2008-2011 timeframe. And there is no one, there is no corporation, there is no nation state. And we all know that in the field intuitively, that the decentralization is a key selling point to the technology. But really, it's the phenomenon of open source that I've seen applied to various fields. I've seen applied to software. I've seen it applied to music. Here we're applying it to ledger technology and specifically financial technology. And that means there's really no entity behind it. And so that characteristic is usually, glossed over, I want to say, these days, but to me is a foundational component of what's going on with the open source ledgers and Bitcoin in particular.
Yeah, I think that's exactly right, Marc. And it doesn't matter if maybe it is glossed over a little bit, but everyone approaches Bitcoin from a different angle. But as long as Bitcoin does remain open source and decentralized, which it is effectively the biggest open source decentralized project in the world at this point, I think it doesn't matter if not everyone understands that to begin with. And I just yesterday, when I was making some notes for today's podcast, Marc, I did see a reference that said that you also had a relationship with the guys. I think it's called the Mont Pèlerin Society. What's that about?
Yes, Mont Pèlerin is one of the crypto banks out of Geneva, and it's one of my investments, and it was a portfolio company. I invested in them in 2018, and they pursue. If you look at what's going on in general, just not Mont Pèlerin, but really, I think the field is saying something to the banking infrastructure, be it retail keeping their balances in stable coin. Payments are underdeveloped and may not be a fit for crypto in the long term, but definitely keeping a store of value and having the ability to bank in the cloud is really what Bitcoin has shown is feasible with this technology. But Mont Pèlerin really makes an effort to create a wallet in front of it, etc., and doing it cleanly with Swiss regulation. And so I'm an investor there, and that's my relationship with them. The name Mont Pèlerin comes just for the little story because it's in keeping with the open source ethos. Mont Pèlerin was the I think Hayek a community or project, and meaning something very libertarian. And don't quote me. I mean, I'll double check on the name, but it was one of those very libertarian approaches, and specifically that the data of banking, which is a Swiss tradition, should be private, and that there is a need for privacy and almost semi-anonymity in the banking layers. And so Mont Pèlerin refers to a more broader libertarian project, which I'm not endorsing here. Just saying. Clearly, this type of individualistic, open source, decentralized approach to data ownership finds applications also in the banking layer.
That's exactly right, Mark. And I'm just looking at the notes, and I think these are on your website. And it says that the society was founded in 1947 at a conference organized by Hayek. And you mentioned Hayek, and in this case we're talking about Professor Frederick Hayek, who the reason I find this so interesting is because Hayek is one of the economists who was very influential in what people call the Austrian school of economics, right, which is the slightly more libertarian and unorthodox and kind of contemporary society, but that is what a lot of Bitcoiners really relate to, right?
This is true. I always find interesting that be it the open source community, the libertarian community, or the Bitcoin community, people tend to gravitate either towards the Hayek type Austrian economics, which are microeconomics, laissez-faire economics, very decentralized at the economic activity layer, versus the other end of this polarity or equilibrium, which is the John Maynard Keynes approach to funding. And Bitcoin actually, and I find that is true with a lot of Bitcoin people that are familiar with Bitcoin, they think about these issues, not always clearly, but they're at least familiar with these tensions. And I think Bitcoin and cryptocurrencies transcend sort of this duality of microeconomics versus macro, which is Keynes, because it deals with monetary issuance. Hayek, not to criticize him, really didn't, as far as I'm concerned, really didn't address the concept of money. It was all microeconomics, and the fact that money was a thing in and on itself, and the monetary mass and the monetary velocity could influence economic activity is sort of an alien concept even today in most microeconomic Austrian approaches. I have published 10 years ago some research in MMT on endogenous monetary growth under Basel regulation, nerdy, geeky topics we can talk about and put everybody to sleep with. But clearly there is there is an impact to the monetary mass, how money is issued and how it is circulated. And to make an easy bridge with crypto, it doesn't take a long time to understand once you get to on the other side of the curtain, so to speak, to understand that what happens in the order books of the exchanges, the market value of things, is not necessarily intrinsic, meaning pertaining to the things we're exchanging, such as housings or stocks, which was Hayek's approach, but can also be linked to the monetary mass in circulation. And I'm happy to dive into this. Just let's say that what's going on today in the crypto markets in particular, but in general, in sort of the more fringe exchanges, meaning high-end art, stonks, you know, the GME phenomenon, et cetera, is a monetary inflation of an asset bubble, to put it mildly, meaning because we print money, prices go up. And so it's obvious to many participants in crypto that, you know, the monetary mass, the unit of exchange, or the unit of currency the currency we exchange, and its availability has a direct impact on the numbers we put on things, on the gauge we put on things. This is something Keynes talked about at length. Hayek completely ignored, and it's a mix of the two, actually, that I think is applicable to crypto today. And I'm happy going in any direction you want to take all of this.
Yeah, very interesting, Marc. And look, as much as I wouldn't describe myself as an economics nerd necessarily, but I know enough about gauge theory to know that we should not discuss gauge theory today, because that is just one of those rabbit holes that is just too intense to go down. But I don't know if you know who Eric Weinstein is, but yeah, he's I guess he's you know, was one of these intellectual dark web guys, right? And I think he well, he's, you know, he works at Teal Capital. And but he has famously been talking, he's kind of discovered Bitcoin this year and is talking about Bitcoin from a gauge theory perspective and getting into all sorts of arguments with Bitcoiners. But look, let's not go down that rabbit hole, as I say. Let's instead segue, if you like, to what you're doing with 2 Prime. Marc, so so take a step back and introduce 2 Prime. You know, where are you based? When did you set it up, and what is the goal?
Sure. You know, I sold my business in 2006 and started investing as a private investor in that area. So I spent most of 2008 sort of devising derivative strategies on the VIX, the main index for the SPY, the Standard & Poor index. And I became an adept at navigating choppy waters, up and down, oscillations, going down dramatically, going up, and sort of turning this volatility into yield. At the time, in 2008, when I got sort of my on-the-ground training in monetary theory, the banking system, and what was going on, you know, the underlier was the public equity markets. We're talking 2008 financial crisis. I followed 2011 Bitcoin with interest from a strictly monetary standpoint, but it was too early for me as an investment vehicle. It was, you know, the Mt. Gox days. What are these keys things? Also, it was introduced to me by friends in the music industry, which, for disclosure, use Bitcoin to settle drug trades, because that's how some people make a living there. And they were like, Fleury, you understand open source, you understand money, you'll understand this thing. And it took until 2014, 2015 for me to go, this is real, this has staying power, this is not just a gimmick. And the pyramidal nature of the marketing is working over time. By 2017, it was more than this is not just a gimmick. For me, it was obvious that this was a fantastic investment vehicle. And I set out how does an individual, a high net worth individual, approach this investment? You can always buy and hodl. That's what most people do today. In 2017, I started looking at the CME futures market and was trying to replicate some of the options strategies and the synthetic yield I was creating in the public markets, and I was trying to apply that to the crypto markets, because wherever there's volatility, hedge funders are going to be happy. And as an individual investor, I was crowded out of meaning it became professional hedge funds doing these trades, but it was too early in 2017. There wasn't enough futures market. The depth was nothing. I was trading with, I don't know who. It felt very flimsy. Fast forward 1 year, 2 years to 2019, and you see that the futures market was fully developed. It was a lot more mature and enough for guys like me and then some, like big funds or big institutionals coming in. The latest development is the development of the options market. Now, we were talking about derivatives futures, but there's also derivatives options, the puts and the calls. And these are other different instruments, financial instruments, than the futures, and they allow different strategies such as yield, such as put protection, and leverage. And so these markets are brand new in crypto. They're about a year old. They're still fringe. There's still very few platforms doing it right. And they're growing markets. They're functional enough for a hedge fund like us to operate. So all of that technical background to say, after 2 years of, how does a guy like me invest? Well, how do I invest? I HODL. I do own Bitcoin and Ethereum. We create yield. We call it YIDL. You all know how to do that for the most part. This is, you can do it privately with the compounds and the Celsiuses of the world. But if you do it directly with a future strategy, you can earn double of what you get in the retail, or triple what you get in retail if you go to the source of these order books. And that's where we try to trade. And so the futures give us a yield component. Usually retail, you'll get 8% in BTC or Ethereum in the numerare. So you're yielding in whatever you're holding. And this is it's not interesting if it's altcoins that have no value, but Bitcoin and Ethereum is definitely a tried and proved strategy over the last accumulation period of 2018, 2019. And the top of the pyramid, to conclude, what it is that we do, is that we leverage this options market to offer hedged crypto, digital asset products. Specifically, when it goes up, everybody goes up and everybody's happy. What's difficult is when it goes down and everybody loses their mind. When it goes down, the strategies we put up actually gain Bitcoin. So even though in terms of dollar, we're going down, in terms of Bitcoin, we're accreting, we're accumulating. And so we're deploying sort of the traditional financial instrument. It requires savvy. We have a professional trader. We're active in these markets. We spend quite a bit of time in technical analysis, and I don't mean trend lines, but really volumes and the Greeks, the deltas, the blah, blah, blah. And the net is you have this pyramid of 3 stages. 1, we HODL and everybody can HODL. 2, we YIDL. And 3, we hedge, to make a bad pun. And of course, you can do all of that by yourself by trading in those platforms, etc. But it takes quite a bit of time, quite a bit of discovery, quite a bit of due diligence, quite a bit of expertise. And so that's what I do for my own funds. And then we decided with Alexander Bloom, who runs the fund, he was prior with Atomic Capitals, one of the leaders in the STO space. It was one of my investment. And we decided to open up the fund to other people. And just to conclude, it's a new product, but it's been very well received, both by old-time Bitcoin holders that have been through previous cycles, and they know that it goes up and then it goes down 80%. If it goes down 80%, we divide by 2. We have a 0.5 tracking on the put side. What that means is if you lose 50%, we only lose 25%. Basically, we are accreting in Bitcoin. And we're tracking 0.9 on the way up. So we lose a little bit on the way up. If Bitcoin goes up 100, we go up 90. But with that, we're able to hedge. And so old-time Bitcoiners know that that's a way to ride the waves, the structural waves, the secular waves, not just the current bull market, but the bull market and the drop. You know, during the drop 3 weeks ago, we were jubilant because that's when we fill up on the Bitcoin. And it's also attractive to traditional institutional investors that want to get in, but don't want to figure out all the key, you know, and the custodian and who to trust and where to trade, and everybody can huddle, but, you know, treasuries, corporate treasuries can deal with 80% peak to trough. That's just too much volatility for proper institutional treasury management kind of approach. And so this product, or this class of product, which is a hedge exposure to digital assets, is popular both with the sort of the traditional institutional crowd as well as the old school savvy Bitcoin maximalist crowd that have been through the cycles and know what it means.
Yeah, well, there's a lot to unpack in there, Marc. You've got some very interesting thoughts, though. I really did enjoy, I think you said hodl, yeedle, and hedgel. That is quite clever, and that makes a lot of sense. So one of the things I'm kind of pulling out of your thoughts there, you know, you talked about this idea that obviously it's great when crypto is going up, and Bitcoin and Ethereum have been going up. We are in a bull market, but, you know, as you say, that doesn't last forever, and the bear markets in crypto are just, you know, particularly severe. That's just because, you know, the bull markets are so intense. So, well, we're just talking about volatility, really. Volatility goes both ways. So I guess what I'm getting at, and you did kind of talk about how you guys kind of protect the downside here and your hedging strategies, but do you sort of have thoughts on the wider industry in terms of, you know, what about these corporate treasuries that are starting to put Bitcoin on their balance sheet? So the big examples that everyone knows are Tesla and MicroStrategy, but there are, you know, sort of the smaller tiers down from there. It is happening as well. How and institutions, how prepared are people if and when the market does turn? And, you know, are some people just happy to hold, or they'll have hedging strategies, or are they just going to dump their holdings at the first sign of trouble? Any thoughts?
Well, we know from the past cycles that Bitcoin's volatility follows a clear algorithmic pattern with the halvening. As you know, we're now in the third halvening, and I don't want to cry manipulation, but we are perfectly on track, almost 1,000 blocks by 1,000 blocks in the rally. And what we know for sure is that we will have a pullback at some point. Don't ask me where it's at, or ask me where it's at. I'll tell you, 100K, 200K, who knows? The point is that when I hear young retail guys going like, oh, this cycle's different because institutional coming in, it will not go down. It is delusional thinking. We're not here to sell the bull market up. Anybody can do that. We're here to say we're interested in the chop that's coming after, because it's coming. We don't know when, but we know it's coming. And so we just position to that. And that's what we do. The second thing is that the thing that is common between MicroStrategy and Tesla is they both have very hot-head CEOs at their helm that actually thrive on the reputation of reckless cowboys. So that putting all of their treasury in BTC is both a way for us to make a big splash with Wall Street and attract a lot of attention, but it's very much ego-driven, which is fine and dandy. It's all great, actually. Thank God for them. But for the rest of the corporate treasury crowd to follow, your average CFO that buys currency swaps on debt that they hold in treasury, for example, you know, Bitcoin is the moon. What the hell is Bitcoin? Oh, and this volatility, what is it? Well, by point of comparison, I was yielding 15% on a VIX in 2008 on the volatility gauge. That was at the index 40 to 50 during the peak of the crisis. Bitcoin on an average day seems to clock between 60 and 100 volatility. That means you have a tornado every single effing day. How you turn this volatility and reduce it is really what a lot of these guys want to do, because you look very good when you put your Bitcoin at 10K and it goes to 100K. But if you put your treasury into Bitcoin at 100K and it goes and does its usual thing of retracing 80% peak to trough, then you put 100K and you're down to 20, you look like an effing clown. And so most of the CFOs, to use an analogy I have from the IT world, will always buy IBM. Why? Because nobody gets fired by buying IBM in IT. In treasury management, nobody gets fired by hedging. In fact, that's how you do treasury management. That's what CFOs learn in Harvard Business Schools, etc. Is you learn to actually diversify a portfolio of a treasury that has several functions. And I'll finish with that. A treasury in a multinational can be used to pay salaries all across the world. The reserve currencies are the dollar and the euro. Both of them are being debased, specifically the dollar, which is not a bad thing. I'm not here going like debt is bad, and I will argue the opposite until the cows come home, actually. But it's not necessarily a great currency in terms of store of value. And so the rationale of the Teslas and the Michael Saylors resonate with a lot of CFOs, which is, I have all this cash on hand, what do I do with it? Well, the answer is you put it in the cloud in a currency that's internet native. You're going to buy that open source money, and you're going to find all the exchanges in all the parts of the world where you do business and you can pay salaries. So Bitcoin is a natural open source internet reserve currency for multinational, and it is perceived as such. So its benefits are obvious. It's its downside that the CFO needs to protect against. And how do you protect against volatility? By hedging. And so these guys go like, okay, I want to put this money in, but I need the protection and the safeguards in. Otherwise, I'm going to lose my job because I'm not, you know, your average CFO is not Elon Musk or Michael Saylor. And so that's it. All we're doing, and all these new markets are doing, because bear in mind that the technology, the financial technology behind, you know, what we call DeFi here, which is this yielded and this hedged, well, the futures market were born 3 years ago, matured a year and a half ago. The options market for the hedged was born a year ago and is maturing now. You know, it's still it's early. We're one of the few experts and leaders in the domain because it's new, but this is, I think, this is what is expected by this class of participant. Your average high net worth individual can hodl. Your average CFO can hodl, and they can, you know, smooth out that volatility by just holding on. And so they don't see the peak and trough. They just sell when they need to, as opposed to being forced to as weak hands like most retail people do out of fear or cash flow needs. But better than hodl, you have yiddle and you have hedged. This is how every corporate treasury in fiat is managed, actively and passively. And that's why we are replicating in the digital asset space.
Very nice again, Marc. And yeah, look, I do enjoy the hodl, yeedle, and hedgel. That needs to catch on. Sounds better with your accent than mine, but I think, you know, you're exactly right.
I don't know about that.
when you point out that, you know, I think it was basically the end of 2017 that CME launched Bitcoin futures, and it was really, in fact, it was earlier this year that CME Group launched their Ether futures. And just as a side note, it was probably, I think, 2 podcasts ago, I had on, oh, my bad, I cannot remember his name, but I had on the guy that basically heads up the one of the equity divisions at CME. So he was on the show here talking about the launch of CME's Ether future products. And what I found quite interesting is, because I put to him, how do guys like CME, what do they think of this exploding phenomenon that we call DeFi, and how do they look at open source decentralized protocols? If they extrapolate out 10 years, are they threatened? And he basically said no, not really. They just look at it as a new wave of innovative financial tools, and that is the business that the CME Group has been in for the last century. So it's fascinating, I think.
Yeah, I'll go check out that podcast, actually. I need to listen to that.
We'll go to a quick break and then come back, and we'll finish off with the very famous crypto conversation hot take round. And I'm quite excited to do this with you, Marc, because I think you'll have some unique perspectives. But just before we do that, why don't we just give you a sort of a quick opportunity now, again, just to, I don't know, feel free to pitch your firm if you like, or just I guess you're probably more aimed at high net worth institutions and high net worth individuals and the like. But maybe just to finish off this part of the podcast, just to maybe talk about who your target clientele is and where people can go if they are interested in engaging with your services.
So we are 2Prime, a digital asset financial firm, and we offer structured products and one-stop shop to hodl Bitcoin and Ethereum, to create synthetic yield with futures, and to create a hedge with options. What that means to a high net worth individual or an institutional is a profile that tracks 0.9 on the way up, 0.5 on the way down. What that means is if Bitcoin goes up 100, we go up 90. But if Bitcoin goes down 100, we only go down 50. And this is how diversified portfolios are usually managed for high net worth and treasury management. You can find us at www.2prime.io.
Fantastic. And I've just looked up, because I did feel bad for not being able to recall his name. But so the podcast I was talking about was about 2 episodes ago. I'll put a link in the show notes, but that was with Tim McCourt, who is the CME Group Global Head of Equity Index and Alternative Investment Products. And as I say, he was on the show talking about the history of Bitcoin futures and the launch of Ether futures. But for now, let's just
I'll just say one thing.
Yes. Please.
If he listens to these podcasts, as I'm going to listen to his, I think CME needs to kick it up a bit. Compared to what's going on outside of the US, we're just not up to snuff in the US. We need to, specifically CME, bigger volume, tighter spreads. I mean, the US is behind the curve on what's going on in futures and specifically options. There's zero volume, but even in futures, we're lagging compared to the rest of the world. Just, I'll throw it out there. You never know.
Yeah, sure. And just, well, why do you think that is? Is that because there's tighter regulations, or people are slightly more risk averse, or what is it?
Look, I don't know. I'm on the other side of the order book, so I'm a participant, so I can't really comment. There, I'm sure, the legality of everything plays a big role. I don't know. I'm just not behind that curtain, but I think it's a pity because it's going to be a booming business. And right now, the U.S. offerings are not really competitive. It's I don't know. I think, that's it. I don't know why it is.
No problem. All right. Well, let's go to a very quick break. We'll be back in 1 minute to finish off with the very famous crypto conversation hot take round.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices.
BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Not sure what you need? A Brave New Coin consultant can help you assess your requirements. Contact BNC today to find out more. Are you ready to trade the future of crypto today? Introducing Leverage, a self-custodial decentralized exchange that performs with the speed and features you're accustomed to. Leverage is fast. It's powered by Gluon, a revolutionary DeFi infrastructure that makes DeFi work at scale. It brings speed, transparency, and massive gas efficiencies to its users. Say goodbye to exchange hacks, front-running, Ethereum network congestion, and high fees. Leverage is the future of trading. It combines the best features of sci-fi with all the benefits of DeFi. Like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io and trade the future of crypto today.
All right, we're back, and I'm with Marc Fleury from 2 Prime. And Marc, I like to finish each Crypto Conversation podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Yes.
All right, Marc, just want your hot takes, your hot fire. Take your best shot. Here we go. Marc, where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
On a scale of 1 to 10, 10 being maximalist, I'm an 8.
Very nice. Okay. Marc, what would you say is your firmest conviction crypto opinion?
That it's here to stay.
Of course. Most people would agree with that. Okay, here's a curveball. Marc, UBI as a potential fix for AI-induced automation, or perhaps as a remedy for sort of growing wealth inequalities in a dystopian future. UBI, is this a good idea or a bad idea?
You're kidding me, right? Socialism cannot exist during the growth of capitalism. However, socialism is obviously a way forward for post-capitalism. Once the elite has created all the wealth and concentrated in 100 people who hold Bitcoin, do you let the other masses die off of starvation? No. You give them UBI and basic food and shelter, just like Carl said. Marx for his name. And that's it. Have UBI for the masses, and then have an elite that can have exponential growth just because Lambos and boats, I don't know. I really don't know, but yeah, no, you need to motivate the elite. You need to motivate the creators, be it art, be it sports, be it finance, be it physics, whatever. You need to have incentivization in place. And going back to Hayek and Keynes, I think your question goes straight to the heart of that, which is on the one hand, UBI style, probably with crypto, by the way. I'm sure that's where your question comes from. You're familiar enough with what's going on in crypto to read the writing on the wall. The writing on the wall is we're going to have CBDC UBI enabled. That's a lot of acronym soup, but basically we're going to give fake dollars in crypto. The Chinese are ahead of us on that.
Yes.
And at the other hand, if you look at Bitcoin and Ethereum, the concentration of wealth, I'm sorry, I'm going long, but the concentration of wealth is absurd. I mean, we've never seen such concentration of wealth measured by the Gini coefficient. But there is a need for rewarding elites, and there is a need for maintaining the mass. Keynes and Hayek, Marx and whatever. Yep.
Yes, very interesting thoughts, Marc. Hard to argue with any of that. Very good indeed. All right, well, Marc, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10 years. Whatever you like here, what does blockchain or DeFi or Bitcoin and Ethereum, what does it look like in 10 years' time?
It's a great question. And, the Bill Gates quote has been something very close to me. The magical precept is that 1 year is not enough time, but 10 is actually can yield an exponential change out of very small variations. So to that end, with Bitcoin, on one end of the spectrum, I see absolutely nothing happening just like has happened in the past 10 years. And bear with me for a second. I don't mean that just in jest. We talk a lot about the potential of Bitcoin, but what it's really done for us is provide an amazing store of value. I'm not putting it down, but that's the one thing that works. Everything else to me is like still fuzzy. The blockchain, what we use it for, in medicine, etc. But as a store of value, it's dynamite. In 10 years, it will be an even bigger store of value, maybe even going beyond gold in terms of just the assets under management, even potentially at the level of the public equity markets. That's hundreds of trillions. So even just as a store of value, which to me is the base, boring scenario of 10 years of linear progress from here, we may have something that eats money, or the concept of money, because all productive investments are better off sold and put in Bitcoin. In my Facebook feed, I have a lot of kids going like, I'm selling my 401k and putting it all in Bitcoin, thereby consuming all the productive investments. So the worst case scenario, which is the best case scenario in a sense, is that the best investment, just like it's been over the past year, 3 years, 5 years, 10 years, is in fact Bitcoin. And therefore you're a fool to invest in anything else. And that's sort of an ironic twist of, end of money as investments. Now the positive scenario is the exponential one, which says the promise of open source ledgers is much bigger than just money. It deals with identity, it deals with medical data. The medical data should be the property of the individual. People who are in the blockchain get it right. Voting, we've seen in the US the mess of voting and recounting and trusting the ledger, etc. In the best case scenario, it's not just the money that is inverted as an abstraction, but also nation states that sort of lose sovereignty over some bits of biological data, financial data. We see NFTs progressing very fast for art, copyright, etc. And so in the positive scenario, sort of the fulfillment of the promise of the open source ledgers is applied to not just money and the financial system, which is what we're focused on right now, but other aspects of society.
Very good. Well, let's pull back from 10 years ahead to the present day, Marc. But again, we'll stay sci-fi. So, famous sci-fi author William Gibson, you'll be aware of this quote. William Gibson said that the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now? I'm sure you can, but most people just aren't really aware of it.
I actually meditate a lot on that quote from Gibson, and a true story. And I came across it, I want to say like 4 weeks ago, and decided to sit down and just go through it. So I'll give you the cliff notes and not make it too lengthy. But in a nutshell, if we arrive, to go back to your previous question, if we arrive at the end, not the end, but if we arrive at post-capitalism, which is abundance, we have abundance. We have abundance of food. Our supermarkets destroy 40% of our supply because we don't sell it in pretty plastic packages. We have abundance of housing. There are more housing in the United States than there are homeless people in the street. We have abundance. The future is here. It is just not evenly distributed because the mechanism by which we distribute it is money, meaning a concept born out of scarcity and the distribution of said scarcity. And the abstraction of money is partially what has been undone with crypto. And so the whole question of this abundance being here, just not evenly distributed, is, I think, the epochal topic for us, for your generation and mine, but clearly what will impact our kids. And they'll figure it out. And just to wrap up that meditation, it's not a technical problem. We have the abundance. Karl Marx called abundance, he called it late stage capitalism or third stage abundance, which basically says when the machines do all the work, what do, the humans? And it's called the Jubilee in the Bible, meaning we stop being slaves. And then what? We die because there's no money, because we didn't work? So it has to be a mental construct. It has to be a change of perception. It has to be that we view the fruit of capitalism as one and has given us abundance, but struggles to distribute it, not even evenly, because I don't believe in even. But at least fairly, that some people, food and shelter, let's go there. We have abundance. It's since, Jesus Christ called it, all the prophets call it, we have abundance on earth. And so what needs to evolve is the concept of money and money for work. And I think Bitcoin, to your point, and I see where all your questions come from, we are, faced with the future in crypto. It's clear that Bitcoin makes a lot of people think about all of that. If you haven't discovered this little game, it's 3 years old. It's an ASCII interface. It's like the most boring visual. It's called Universal Paperclips, and it's like a cookie clicker. If you remember that game where you just clicked on a cookie, and then you had a clicker that clicked on the cookie for you, and then you had the cookie clickers that clicked on the clicker that clicked on the clicker, and it was abstraction upon abstraction to just click on a cookie. Well, this has been generalized, something called universal paperclips, and it's where you consume all the resources of the universe to create paperclips. And there's several stages, and in the first stage we go through all the marketing, the money, and the blah blah blah, and stage 2 there's no money. Money is not interesting. We're just interested in abundance of paperclips. And that said, I think Gibson, as every good sci-fi magician says, what happens when we have abundance? And we have abundance, and how do we distribute it? And how do we keep the elite motivated, and the producers and the genius artists and the elite sports and all of that things that make us click as a society and humans and individuals? How do we keep it with, not slaving away, fearing death, next to abundant food, shelter, art, and everything else? That makes no sense, right? So, yeah.
Yes, very, very interesting again, Marc. And look, I'm just... I've just had I hadn't heard of universal paperclips, but I'm just having a look at
Check it out. It's a great iPhone game. And because it's free in HTML5, so I'm not selling anything, but you can get the iPhone version for $3 and you'll have a blast.
And what I love about it is it says the Wikipedia entry says that it was inspired by Nick Bostrom's famous thought experiment, which is the paperclip maximizer, which is, it's kind of a often expressed idea in kind of AI, dystopian AI thought experiments, which is, that's what goes wrong with AI, because if you program an AI to do one thing, in this case, make paperclips, it will optimize that to the
absurdity and beyond.
Exactly. All right, let's finish this off, Marc, to absurdity and beyond. The final question in the Crypto Conversation hot take round, and I'm afraid it's a deep one again, but it is time to zoom out. What is the long-term future here for the human race, Marc? So, do you see dystopia or utopia?
So, another magical precept to Bill Gates is you can divine the path short but not long, because it's chaotic. And so if you're going to project the mind is going to project a sci-fi story. You can project it negative, you can project it positive. I understand even political phenomena like Trumpism as magical thinking, which works even when the underlying is completely false. And that shows the power of suggestion in how we evolve. And so it's not a question of whether we have utopia and dystopia. That's not for us to tell, but for our kids to experience. What we can do is project, and obviously we need to project utopia. And it's going to be very long, but universal paperclips give you the 3 stages, just as a side note. The first one is dominion of earth and abundance and internet and open source money. We're there. End of nation states is probably next. You know, this is what is called in Western Catholicism the Christ program, meaning abundance on earth, and so end of slavery, the Jubilee. This is all biblical. The next step is obviously solar colonization, to quote other sci-fi authors.
Kardashev scale.
Of course. And Kardashian 3, Dyson 3, which is I think Kardashian 5, don't quote me on the exact levels, is sun dominion.
Yes.
So earth dominion, abundance. Solar system dominion, which is Elon colonization of Mars, for example. And then sun dominion. Which is, of course, a beautiful sci-fi project that says, imagine all the resources of the sun and the energy that the sun puts out, and picture in your mind that the earth and all its abundance just captures an infinitesimal fraction of that energy, thermal energy,
and
photonic energy.
And then we divert it to proof of work, Bitcoin mining.
I think Bitcoin may be a litmus test that, you know, civilization may fail. We're undoing the concept of money, but burning the real resources of the planet doing so. Something's going to give at some point, you know.
That's right.
If that makes sense.
It certainly does, and that is outside the scope of today's podcast. Let's finish this off, Mark. The final question, I'm sorry, I do have one more. The final question is, let's close this out. What is your favorite science fiction book, film, show, or universe?
Book, Asimov Foundation.
Very good.
Film, Matrix.
Yes.
And what was the last one? I'm sorry.
Well, you only needed to choose one, but TV show or universe in general.
TV show, sci-fi. I loved Black Mirror and Serenity.
Fantastic.
Yeah.
Brilliant. Hey, this has been a lot of fun. I've really enjoyed getting your unique perspectives today, Mark. Just final shout outs. I'll hand the microphone back to you. Just do any closing thoughts or direct people to where they can find you on your various platforms, 2Prime website, etc. Go for gold.
Thanks, Andy. Just 2prime.io. Digital assets and an intelligent approach to investing in the crypto space. And other than that, thank you very much for very thoughtful questions, Andy.
Thank you, Mark. All the best, and bye for now.
Bye.
All right, there you go. I told you that one does go deep. I hope you enjoyed it. I really did enjoy it. So shout out to Mark. You can come back on the show anytime. My man, some of the things that we talked about in the show are in the show notes. For example, that CME Ether Futures podcast I did with Tim McCourt, that's in the show notes. This paperclip thing, what is it called? Universal paperclips. Fascinating. I love that. That is in the show notes as well, as is, of course, a link to 2Prime. All right, we better leave it there. I'm out of here. As I say, some big shows coming up this week. Look out for the return of Alex Mashinsky from Celsius. That is going to be a big one. And also Samson Mao from Blockstream. Those episodes will be coming up this week. So make sure you are subscribed to the Crypto Conversation podcast and whatever app you are using subscriptions on, people. And then you get notified when those episodes drop. Okay, thanks for listening. I'm done. We are out of here. This was the Crypto Conversation for Brave and new coin.